Hey, what's up, guys? Welcome back. Another week, episode 43. Can you believe that? We're kicking it, man. Man, what about this market? This market is just nuts. So, anybody that was thinking the market was hot a week or so ago and decided to pull out, waiting for a cool down, uh, you're not getting it. I think that's kind of some evidence that we never want to time the market because that's when we kind of lose our ability to make some gains. So, is there an echo? Bob says there's an echo. Hmm, I don't know. Is there an echo? Somebody let me know. Wrong mic. Let me see. Dun, dun, dun. Hit the settings. Go to audio. It says I got the right mic. Maybe I'll try that one. Is that one any better? All right. Let me know. Sounds like I'm in a tunnel. What about now? Am I out of the tunnel? No. Still in the tunnel. That is a bummer, man. Make sure all my. I feel like Russ, man. I feel like there's no back. There's a background mic somewhere. Hmm. So it sounds like maybe there's two mics on. Let me do this. On the audio, I'm gonna. I'm gonna try that. And try that. If it's not that, I'm not sure what it is. Oh, it is better now. Didn't change. It is better. I think it's okay. All right. Well, hopefully it is, because I'm. Oh, that's it. Good, good. Because I was at the end of my wits. Perfect. Awesome. Well, that is great, man. So, hey, thanks for the feedback. Without you guys, I would just be sitting here talking and being in some kind of well. Hey, let's see who all's here tonight. Episode 43, Rust Moments. You are right, man. We need to plan something kind of cool for episode 50. That'd be kind of a cool thing. Maybe I'll have somebody on. Let me know who you would want me to have on if they would be willing to join me. I'm going to grab a pen here because I won't remember this stuff later. And I'm going to grab a piece of scrap paper. So let me know if there's somebody that I need to invite for episode 50. That would be cool. And what kind of theme do you think we should have? That'd be kind of a fun thing. Okay, so Bob's on. Good to see you, my friend. Welcome back to the program. We got Robo Hand Tech. That is good evening to you as well. Jim Betts is on. Always good for a dad joke every now and then. Run DMS, also known as Money Mind, who's in the Discord as Money Mind. And by the way, if you're not on the Discord server, just click the link. Actually, I don't think I put it in. So right after this, I will go in and put the link to the Discord server, or you can look up one of my like last week's live stream, and it's in there. I for some reason forgot to copy and paste the links, but anyway, I will do that after the broadcast tonight. If you want to join the Discord, it's free. You can just join, and there's over 100 of us in there now, and we just talk about stocks and whatever we want to talk about. Sometimes I talk about crypto, and I don't talk about crypto much because I don't know anything about it, but there's some that do. So Pat, my buddy Pat, is here, and Brad Durfee's here. Man, we got a lot of folks here tonight. Let's see. We got Kevin Mendoza. We now have at least two Kevins. I haven't worked my way down the list, but we have at least two Kevins, and so that is a quorum. I think we can go ahead and get started. I'm going to pass up all of these mic off things because I, I think we fixed it, but anyway, let's see. My buddy Michael Swami is here. He said, "Did you fall in a well, Timmy? Lassie, please go find Paw." Yeah, it sounds like I was in the hallway. El Dynamico, welcome, buddy. I appreciate you being on. And let's see. Steve C is on. Hello, Steve. We will hit the news from Simply Safe Dividends tonight. And let's see. Let me see if there's anything else cool. Bingo, good. It's fixed. Awesome. Perfect. Much, much better. Billy Johnson is here. I don't know who Jack Bogle is, but maybe I should look that up. Oh, Jack Bogle for inviting on. All right, I'm going to start writing these down. So Jack Bogle. Maybe I can reach out to people that I don't know. Russ and Ryan for 50. Yep, those are good potentials. You can send us all $50. Yeah, I wish I had a way to do that. That would be kind of cool. Like I would probably have 1,000 people on the live stream if I said, "Hey, everybody that joins, I'll give $50." Right? But I don't want to pay people to be here. You're here because you want to be here. I'm here because I want to be here, and that's what makes this a beautiful thing. Oh, I'm sorry, I didn't even show that. There we go. That was from my buddy Run DMS or Money Mind. All right, let's see. See if there's. Oh, Honeybee is here. Welcome, Honeybee. I played around with a lot of honey this weekend, so glad to see you are on the program. Gendry is here. Can I please check EC Echo Petrol? Let me. I'll put that on my list here. EC. We'll get to that here a little bit later. So Billy Johnson says have Jack Bogle on. I will reach out to him. I don't even know him. So Bob Wright says Peter Lynch. I can pretty much assure you that Peter Lynch does not want to come on my program. But anyway, Greg has made it. Good to see you, my friend. Let's see. Yeah, Jack will have to be channeled. Send us some honey. What is it? Clausian? So that's awesome. Send us some honey. There you go. It's a sticky business, man. Yeah, I spilled a little bit of honey out there and had to clean it up, and it was a little sticky. But I tell you what, it's really kind of cool because when you spill a little and you kind of wipe it up with your finger and taste it, it's really good. Let's see. Yeah, Jim, USB. I'll talk about them here in a little bit because they are giving earnings this week. So let's talk about US Bank Corp. Oh, so Jack Bogle has passed. So I just don't know who he is. So maybe I should look him up. Oh, he created Vanguard. I got you. I'm with you now. Yeah, so Russ says I should try to get Buffett on. I don't know. But, it would be kind of cool if he would do that. I kind of doubt it though. But hey, you never know till you ask, right? So anyway, so those are good names. So I'm gonna scratch out Jack Bogle, and we'll see. We'll see what happens. I don't know. We've got a couple of weeks here to figure this out. Man, so 50 would be 7 weeks from now. It's going to be, hopefully it's not the weekend after Thanksgiving because I'll be deer hunting then. I'll have to look at that. Anyway, we'll figure it out. Yeah, Jimmy Buffett would have been much better, but he's also no longer with us. That is true. Okay, so Gendry's wanting to know about my thesis with Hershey. All right, so we will hit that as well. So let's move into some of the material for tonight. So I'll get gender out the screen there. So I don't know. I thought about changing this picture today, but I just didn't have time, so I left it up there. This is really a cool place, though. It's there in Yosemite, and that's like a lava, not lava, but it's boiling water back there. It's really cool. But anyhow, all right. So the key earnings releases this week, and this is it's kind of interesting because it kind of starts really everything off. And so we got 210 earnings releases this week. I picked 11 that I thought might be key for the group. So tomorrow morning, we're going to wake up and we're going to have a lot of earnings to kind of sift through. But I think there's 4 that'll be really important. There's 2 banks, 2 of the big banks, Bank of America and Citigroup, who will issue earnings in tomorrow morning, actually, when we wake up. So I think what I'm looking for there is where is their net interest income going? Are they seeing improvement in their NII? And then secondly, what kind of write-offs are they looking at? Are they looking at write-offs increasing? And so we still aren't sure if the Fed's going to get this smooth landing, right? So I think that's going to be pretty important to see. So we'll get 2 of the big banks, bang right away. Then we're going to have Johnson & Johnson. I think, for Johnson & Johnson, what I'm looking for is maybe some clarity around the talc settlement. Where are they in that process? And so I'm looking forward to seeing that. And then they've got some drugs out there that are really taking hold. So, I'm looking for that as well. Now, United Health, that's coming in tomorrow morning also. I think what I want to see there is, they have grown like crazy. I'm going to look at so United Health, I've not been in them long, maybe 6 or 8 months, and they're at 33% already. So what do I want to see from them? What I want to see from them is, is there an update on this DOJ investigation into their business practice? I forget exactly the details of it, but they are investigating this business practice of United Health. And so I think, it'd be interesting to see if there's any feedback on that. And but other than that, where are they at with people enrolling in programs and things like that? That's where Humana is getting into some trouble, is that they are slow in getting their subscriptions up. They're slow compared to the prior years. So, I want to see from United Health where they are in that process. So tomorrow morning we got 4. Then we go to Wednesday morning. We got 2 that I think are interesting. One is ASML. Now, ASML is the company, I believe it's a Dutch company. It's over in Denmark, that makes the lithography machine. I forget exactly how to say it. That makes these chips, and so they are a very key part of the whole chip manufacturing process. And so what I want to see from them is what kind of sales do they have? Are they hitting the mark? So that's one thing. Secondly, I want to see if there's any movement in them being able to sell into China. And if they are able to sell into China, it's a game changer for them. And we'll talk about why I don't gamble on earnings calls here in a little bit. But so anyway, that's what I'm looking for ASML. Then my buddy Jim and I are both interested in, not Jim and I, but Jim, my buddy Jim Betts and I are both interested in U.S. Bancorp. I'm looking at U.S. Bancorp, want to see their net interest income, obviously. And I want to see that that they're getting stronger, that they are building their asset base and producing more earnings. Also looking for the write-offs that they have. But I'm holding on USB. I think I put them as a hold this week. Let's see. US Bank Corp. I added a bunch of stocks. I now have 88 stocks that I am tracking on a weekly basis and doing buy, sell, and hold on that, plus pulling in all the information of what I think they're going to make in the next year and things like that. So, but yeah, U.S. Bancorp I have as a hold, and so I think they've grown in share price to the place where I would just hold onto what I have. They're about 2.8% of my portfolio. So yeah, they're looking good. I think I'm interested to see how they did in the quarter, but I think a lot of their undervalue has gone away. I think they're about 10%, maybe 9% undervalued at this point. So not nearly what it was, a few months ago. So where are we at on US Bancorp? US Bancorp, yeah, they're up 33.6% in the portfolio. So both of those stocks have been really good to me this year. And I don't remember exactly when I started with US Bancorp, but I think it was this year also with them. Okay, so those are the two for Wednesday. Now Thursday, there's three. I think Elevance Health. I don't own Elevance Health, but I want to see what they are looking like from just a healthcare perspective. Elevance Health is, I guess, the parent company for like Blue Cross Blue Shield and some other names like that. So I want to see where they're seeing the insurance market going. Then Netflix is always a fun stock to hear. My understanding is they're no longer going to share their subscriptions, ads, and losses. So we'll kind of see investors kind of flounder to find other metrics that'll help them understand where profitability is going to go in the future. So looking forward to seeing that. And then Taiwan Semiconductor is Thursday. I really looked, and it didn't say in tip ranks, and I even looked on their website. It does not say if they're going to issue before the market starts or after it closes. So sometime Thursday, I guess whenever they get ready, TSM, Taiwan Semiconductor, very similar to ASML, but Taiwan Semiconductor is, I guess, the behemoth manufacturer of chips. And that's who Intel wants to compete with, but I don't think it would be able to. So anyway, they will produce an earnings release on Thursday. So we'll see how that goes. Again, for the semiconductor space, I think that'll be an important one. Then we have, excuse me, on Friday, I think two of interest would be Procter & Gamble. Procter & Gamble's this huge staples company that has pretty much everything from diapers to, whatever, adult diapers, babies diapers, all kinds of stuff. And so anyway, it'll be good to see kind of where their profits are and what inflation is doing to their business. And then we have American Express. Now, again, from American Express, they have a little different clientele than some of the banks would. They're a little bit more affluent. And so I want to see kind of where their write-offs are as well, kind of get a gauge for the economy. So I think, if I kind of put all of this together for this week, I think we're going to get a really good cross-section of how the economy's doing. So anyway, I think those are going to be 11 of the 210 that'll be of most interest this week. I also wanted to share that I have learned, one of the things I've learned, at least for me, you can take this, you can, file it away, or you can throw it away, or you can actually apply it, is don't try to predict the outcome of the next earnings release we are investors, not gamblers. So, early on, I know I would go, well, I think they're really going to knock it out of the park. Um, it's okay to think that, but as an investor, I'm investing in the company, not in a quarter. So yeah, I may miss out on 5% up or something like that, but I also might miss out on a 5% down. So I don't try to predict the outcome of the quarter. I'm looking for information that's going to help me be a better investor, and that's what they share in either their 10Q or their 10K reporting. So we're investors, we're not gamblers. I don't go, oh wow, I think ASML is going to have a great quarter, so I'm going to go buy a bunch of shares of that. It's just not that's gambling to me. That's not investing. So I don't know. Maybe you guys disagree with that. So now we're going to go into questions for Kevin. We got one from Summarizing 1980. I think he's Kenji in here. I don't see him in yet. But he asks, how do you handle your dividend payments? DRIP, checking account, MMA. That's not mixed martial arts. That is the money market account. Settlement fund, split percentages like a pie chart. So I thought I'd just share what I do, and doesn't mean you have to do it this way or anything. It's just, this is just what I do. So I get my dividends into my money market account. I let them accumulate in there until I'm ready to buy something. And when I'm ready to buy something, then I buy it. I don't drip. And if you don't know what drip is, that's the dividend reinvestment program. Used to be that you had to have a special account with individual companies to participate in drip, but now you can do it within your brokerage account. They can do fractional shares. Most of them can do fractional shares. So you basically just let your dividends kind of roll into fractional shares of the company, and they would, your shares just kind of keep going every quarter. I don't drip, but there's nothing wrong with it. If you want your shares to accumulate with very little effort, then that's a good way to do it. What I tend to do is I tend to let them accumulate until I get enough, and then whatever my top stock to buy is, that's what I will buy with it. Not let it go back into the individual stock. And I don't know. I mean, you could do some kind of study on which is better, but it's more fun for me when I can actually pick what I want it to go in, rather than just letting it kind of roll over. But if you don't have time, if you got a stressful job, and you just want your dividends to roll over, there's nothing wrong with that. There's nothing wrong with the dividend drip program. So there's that. And so next question is, do you implement tax loss harvesting? Now, this is going to be for my friends here in the U.S. Probably not of much value to my foreign friends here, but for my friends outside the U.S. But anyway, here's my answer to that, and it's sometimes. Sometimes I do, sometimes I don't. So will it? Here's some questions that I ask myself. Will it reduce high marginal tax rate income? And if I'm in a low tax rate, then it probably doesn't matter a whole lot. I want it to be reducing a high marginal tax rate. And if you don't know what a marginal tax rate is, it is the tax that would be paid on your next dollar of income. We have that graduated tax here in the U.S. So if you make between X and Y, then you get a certain tax rate, and Y and Z is a different higher tax rate. So if it's like in one of the higher marginal tax rates, then I may consider it. Second question is, do I otherwise wish to exit the investment? If I have an investment that is losing money, and I want, and the thesis has changed, and I want to get out of it, then I may implement a tax loss harvest where I will sell at a loss and use that loss to offset other gains, and then invest it, in something else. But if I do participate in tax loss harvesting, and then after I forget how many days it is, 30, 45 days, somewhere along in there, you have to be out of that investment before you can get back into it. Let's say I sold Verizon and for a tax loss harvest, and then let's say 45 days later, I came and bought Verizon back again, which I have to wait, or then they don't, there's not a tax benefit for it, but it's called a wash sale at that point. But if I come back into it, I must realize that all I did is delay the tax implication. I did not eliminate my tax. And so why do you say that? Well, let's say that I bought it at 50 and I sold it at 40. And let's say 45 days later, miraculously, let's say it was 40 still. So I buy in at $40, and then 10 years later, I sell it at 50. So I got the tax benefit when I did the tax loss harvest, but then I had to pay the tax. Whereas if I had not done the tax loss harvest, I would have bought it at 50 and sold it at 50 with no capital gains tax. So it's really only about the timing of the tax, not necessarily about the tax itself. So just recognize that it is a delay, not necessarily an elimination of the tax. So hopefully that's helpful. Here is a lessons learned that I've actually got a tab in my spreadsheet, my tracking spreadsheet that I use. And this is number 25. And number 25 says taxes are a consideration, but not a reason to buy or sell a stock. So I never let taxes drive my decisions. I will always consider taxes, and maybe I will do things in different timing, or maybe I will structure things a certain way to handle the taxes better. But I never let taxes be a reason to do something or not to do something. So hopefully that's helpful. So, all right, there we go. That is the lesson for today. And let me get this off of the screen. All right, so I already see a lot of questions in here, so I'm going to go ahead and switch this thing over to all of our fun stuff. I'm not going to go there yet, but I know I'm going to. So, okay, there we go. Are we ready? So let's see what we got here. Let me catch up with you guys. All right. Let me get back to where we were when I didn't know who Jack Bogle was. Oh, yeah, here we go. Kevin Mendoza suggests that I have Bill Nye the Science Guy. Yeah, it's too bad. I think Bob Newhart passed away. They had that back and forth on the Big Bang Theory. That was hilarious. All right, let's see. Yeah, so Jim says he'll ask Warren if he's willing to come on. He borrowed some money and said he would pay me back on Friday. Yeah, he's like, hey, dude, do you got 20 you can lend me? I need to buy some lunch. Yeah, I get it. Here's my buddy, John J. I haven't seen you, John, in a little bit. So with 15 plus years of market growth, do you see a major pullback coming? What will you do with 50% drawdown for, say, 10 years? Stay that way too. How are you hedging, if at all? Yeah, I'm not hedging at all. My thesis is that even though there are times the market will go down and we should expect it to go down, it does not stay down forever. History says since 1929, or actually 1915, that the market ultimately moves higher, and we have sometimes long periods of time where it stays down, but that it ultimately grows higher. And so I don't hedge that stuff. So John, the way I've kind of set my portfolio up, and as you guys know, maybe you don't know, I'm retired. I retired at the age of 55, And so my theory or my thesis here is that I am using dividends to provide the cash that I need in retirement. Those dividends come into my account, and if I need them, I spend them. I also have other sources of income, so I'm not totally dependent on the dividends. So that's why I do reinvest dividends as well. Um, so I don't use the drawdown strategy. I think I think I would be stressed out if I thought that, we're going to have a downturn of 20%, 30% in the market, and I'm having to pull stuff out to live on with the depressed prices. So what I like to do is invest in companies, bring dividends in. If I need the dividends, I will spend them. If not, I will reinvest them back into the portfolio. And then the movement of the portfolio up or down, it's fun when it goes up. I can buy more shares when it goes down, and it's just much less stressful for me. So, John, that's the way I do it. I don't use that drawdown strategy, but I mean, there are many that do, and I know there's a lot of financial planners that just believe in the drawdown strategy. I just like getting the cash from dividends, living off that cash, and letting the corpus or the portfolio continue to grow. I don't want to drag it down. So that's kind of where I am. Yeah, yeah, wet blanket, but a real possibility. Yeah, I mean, we got to think about that. I mean, it very well could happen. So, but no, I don't hedge. And if my shares go down 50%, hopefully my dividend companies who are solid, strong balance sheet companies will continue to pay their dividends, and I should be fine. So, and if not, then we got more problems. But buddy, I got some chickens, I got some bees, and I got eggs, I got chickens, and I got honey. So I think I can live for a while on that. Probably grow some stuff out on the farm too. But anyway, if it gets that bad, I think we'll be in worse shape than worrying about where our portfolios are. All right. So Gendry sold their Kenview stock, little growth and unattractive valuation. I when they did that split off with Johnson and Johnson, I did not get any KView or Kenview shares. I just went ahead and got all Johnson and Johnson. So I think that's a good move. Actually, I'm not Kenview is not a stock that I even have on my watch list. So I think that's good. Let's see. Michael's A.O. Smith, I think, just reported. Any thoughts? I've held them for years. I did not see their earnings, and I don't follow them. I'm going to write them down, though. A.O. Smith. I'll hit them because I think so. We already talked about U.S. Bank. Then we got EC that I need to hit, the Hershey. Then we'll hit A.O. Smith. So let's just go ahead and do that. Let me get out from behind the 8 ball here. My thesis on Hershey. Somebody wanted to know my thesis on Hershey. I think first of all that chocolate is is as an addictive drug. I am personally addicted to chocolate myself. So I think Hershey is a company that's going to continue to do well. I think they're struggling with this long-term, I say long-term, at least medium-term issue with cocoa prices in the off the coast of Africa there. And, I think what's going to happen, since it has been medium-term, let me kind of back up for a second. Companies that deal with commodities like cocoa or with corn syrup, all that stuff, they will have a hedging strategy in place where they are buying that product at a future price, right? So they will say, I'm going to buy 2025 cocoa, X amount for this price, and they will go ahead and lock that price in. Then it doesn't matter where the market is, right? So they had that in place about whenever this started, about at least a year ago, when these prices started going up. So now it's been about a year, and these hedges are rolling off, and so they are putting on hedges that are going to be at a higher price. And so I think this is going to be around for a while for Hershey. Even if it drops immediately, I think they're going to struggle with their cocoa prices. But I also believe that the management team at Hershey is very creative. And, I've just seen some really cool things from them. So I believe they're going to figure this out. It may not be short term, but I didn't get in it for the short term. I got in it because I've always wanted to hold Hershey. And my average cost now in Hershey, just for grins, and it's weird because it shows up as the Hershey Company. I always look for it in the H's and it's in the T's, but at least on my spreadsheet here. So my average cost is $183.64. The current price is $186. Now it's been recently up above 200, like 210, and now it has dropped back again. If it drops significantly below my 183, then I'll buy some more. It's about 2.8% of the portfolio. I may take it up to 3.5% or something like that. And then if it drops even further, I may take it on up. But it just depends on what its valuation is. Let me see what I have it at. The Hershey Company. Maybe I should sort it that way. That's what I'm going to do. A to Z. The Hershey Company. Yeah, so I show it a little bit undervalued, maybe about 9 or 10%. But if it drops significantly from here, I may pick up some more shares. Who knows? But that's kind of my thesis on Hershey's. So now let's take a look at A.O. Smith. I'm going to go ahead and hit this up. I tell you what, before we do that, let's get the Simply Safe dividend news out of the way. We'll go back. We did this on what is today? Today is I don't know what today is, the 14th. So it's the 7th. So on the 7th, so we'll pick up on the 8th. How does that sound? And wow, we even start out with A.O. Smith, who raised their payout by 6.3%, extending the streak of increases since 1993. So that is, like 30 years? Man, that's fantastic. So they're a building products company. I know they make like water heaters and, stuff like that, So let's see. Let's go into Simply Safe Dividends and see what they say. They are a very safe dividend. Their dividend yields about 1.65%. They obviously just grew it at 6.3%. Let's see if there's anything cool in here. Here we go. Water heaters, boilers, heat pumps, tanks, water treatment products in North America, China, Europe, and India. So they are somewhat international as well. They're already in the China market. That's all interesting I see there. But let's go down. Their payout ratio looks really good. Look at this dividend history. That dividend history looks really sweet. They got a 31-year history now. Currently pay at 34 cents. Looks like according to Simply Safe Dividends, according to their price earnings ratio, they're within a fair value range, and based on the average dividend yield, they are up. But I don't pay much attention to that. I know some of my friends do, but all right. So payout ratio is 35% moving the next 12 months. So that is really good. And their cash payout ratio is pretty similar. So that's good. Earnings per share, they've had a little bit of dip, but then they're kind of up and to the right. Free cash flow looks good. Let's look at their shares outstanding. They've dropped from 182 to 149. Return on invested capital looks awesome at 36%. If that's 15 to 20%, I get excited. So 36% is really good. I may have to add them to my spreadsheet. And their interest coverage ratio is really, really good. So net debt is 0. So from a financial perspective, they look really good. Their balance sheet is strong, solid. Let's see what their valuation is according to Morningstar. AO Smith Corp. Got it. Oh, they don't have one. Wow. It's a Q rating, so it's a quantitative. They don't have, a human that actually goes in and calculates it. So, but they say it's about $70. So they're about a 15% premium. Let's see where the analysts think this thing is going to go. That might be more fun since we don't have a fair value. Here we go. Analyst forecasts. So the high is 92, the low is 72, the average is 81. It's about a 1.5% downside. So it seems like it might be a little pricey at the moment. I think, I like what I see. I'm going to add it to my list, and I like what I see, but I think the price is a little bit high, at least for my purposes at the moment. So hopefully that helps on the AO Smith. So anyway, Michael, from my perspective, love the company. I love their financials. I love everything about them, but the price seems to be a little bit high for me at the moment. So hopefully that helps. Oh, I might be getting some feedback. Oh, okay. Good. Problem's now solved. Huh. Yeah, maybe I'm talking too loud, or maybe I'm not close enough to the mic. I don't know. Yeah, that's right, Michael. So it is 30 days. I couldn't remember if it's 30 or 45, but otherwise it's a wash sale. That's right. Yeah. Run DMS Money Mind says, I'm not retired. I own a honey business. That is true. Who in their right mind would do that? Certainly not me. And a professional YouTuber. I tell you what, I don't think, based on YouTube revenues, I don't think I could survive. So, well, it's not much. Trust me. I do this because I enjoy you guys and I enjoy this process. So it's certainly not because there is a ton of stuff in here, or a ton of profit from my perspective. Oh, I got you. Bob had 2 tabs open. Yeah, that'll do it. That'll do it. So Jim says he drips ADC, Agree. I think that's Agree Realty. John Deere, General Dynamics, JP Morgan, Lockheed Martin, McDonald's, and Union Pacific. He takes the cash on the other 20 holdings. E-Trade doesn't permit fractional shares, so I drip the higher priced holdings. I gotcha. Yeah, so I'm in Fidelity, and they will drip, to the last penny. So, but yeah, no, that's good. That's a good way to do it. If that's what you like to do. So Run DMS says that they drip investments that they won't sell. The other dividends get put into the weakest performer percentage-wise in my portfolio. Got it. Yeah, absolutely, Michael. You are more than welcome. By this RoboHand Tech. Buy bargain bin stocks at multi-year lows. Wait and bingo, success. Yeah, that is true. That's a way you definitely want to do it. You have to be careful with your bargain bin. So there's like, for instance, you can buy Walgreens Boots Alliance really cheap right now. You can buy who else is really cheap? CVS is cheap. Intel is cheap. Anyway, I can't think of more, but there's a lot of cheap stocks out there. And so at least from my perspective, I want to be careful not just to buy cheap stocks, but to buy stocks, good stocks that are cheap. And so that's why I do what I do when I try to look at their financials and their management team. And I mean, that whole process that I use is designed to try to understand which companies are really good underneath. They're just having a tough time. So that's what I do. Robo hand. Let's see. Well, Michael, I appreciate that, man. I enjoy this, and believe it or not, it helps me as well, because I don't know that I would have built the things that I've built to solidify the process if it wasn't for this community, and even the feedback you guys give me. It doesn't it helps me a lot to kind of really think through stuff. So you guys are my accountability guys. So that's good. And and I really find that to be true, because if I'm gonna have a portfolio, I need to have somebody that can hold me accountable, and you guys are a part of that. El Dynamico says that Realty Income pays tomorrow. What do you guys think about Realty Income? I don't own them. I used to own them, but I don't. I went through this process where I said, 42 holdings is way too many. I'm now down in the mid 20s, and Realty Income was one of the catastrophes from that. So, but I saw that some of their customers are losing. They're losing some of their stores. I don't remember who the latest was, but I just saw some banter about that on the Discord. So, what do you guys think? Jim Betts says that Alpha Spread shows AOS is 9% overvalued. Yeah, that's pretty consistent then with the others. And so, and as we all know, the fair value is not precise, and it's not precise because we don't know the future. We only can take what we know today and predict the future with it. And so 9% may not be terrible, right? And so if you're going to DCA in, and it's maybe not a bad time to get started. But the way I do it, I usually would go in with at least 1% of the portfolio. So I really don't want to jump in when it's higher priced. So that's just the way I do it. On Tip Ranks, you chose top analysts, not all analysts. How many extra are there in A.O. Smith as an example? Okay, let's take a look. Oh, I have it still up, so that's good. So top analysts, there are 7. All analysts, there are 7. So in A.O. Smith's case, they are the same. But if I were to look at, let's pick somebody like Johnson & Johnson, somebody that may have a lot of analysts. So they have 15 analysts and 9 top analysts. So in Johnson & Johnson's case, they've got their top analysts have an average of $168 for 1 year out, and all analysts have $173. So I usually will pick the top analysts because I'm not using them to determine what price I should pay, but I am using them to validate what I'm seeing versus what they're seeing. So in my model, I have them kind of compared with, I believe that, in 1 year we're going to see X% return. In this case, they're saying 4% from the top analysts on Johnson & Johnson. So let's see. Yeah, so I'm saying the growth of Johnson & Johnson will be 5%, and they're saying 4%. So that gives me some comfort that I'm in the ball game, right? And so it really helps me validate what I'm doing in my model versus what analysts are seeing in theirs. And there are times that they don't match up that well. ASML is one of those times. ASML is the analysts have it like growing like 40% or something like that. And my model says, no, it's probably more like 8 or 10. And so anyway, so sometimes they're way off. And then I try to understand why that is. But anyway, that's why I use this. I think this is a really good tool to use to kind of validate where my model's at. So hopefully that makes sense. There we go. Let's see. Michael Swami, he says he's up. I'm not even sure what that means. He's up 200%, so I can fade the decline. Awesome. Oh, yeah, that's right, Russ. It was 7-Eleven. They're closing 4,000 stores in the U.S. That's a lot of stores, man. Oh, 400 stores. Correction, 400 stores. Yeah, Michael's says 444. 3 are on his commute to work, so you're not going to be able to stop and get those Slurpees, man. Isn't it 7-Eleven that did the Slurpee? That when I was a kid, that was like the thing, man. Is you get the Slurpee. Yeah, True Value. This is right, Bob. The True Value is cheap. That means they filed for bankruptcy. So, yeah, when you get True Value, which is like you pay something for nothing. That's called cheap, right? Yeah. Let's see here. So Jim says from his portfolio, Seeking Alpha, Vici, ET, which is it Energy Traders, I think, MFC, Realty Income, and Agree are flashing with 2 buys and 1 strong buy on each. FYI, in the event someone has these on their radar. Okay, that's good. Good to know. Yeah. Fast Eddie, welcome, man. I haven't seen you yet. So talking about 7-Eleven makes me want a Slurpee. Absolutely, man. That man in the good old days, back when I was a young whippersnapper, the Slurpee was the thing, man. Now we got what is it, the Circle K with their frozen Coke and stuff like that. I don't usually play around with that too much now, but when I was little, I did. Yeah, Michael says 7-Eleven seems to be doing the same thing as before and expecting different results. Yeah, absolutely. That's the definition of insanity, right? Insanity is doing the same thing over and over and expecting a different result. Yeah, Slurpee out of a big gulp cup. That's right. Wow. So Jim, Realty Income is your largest holding. So Energy Transfer. Yeah, that's right. So 7.59% of the portfolio. That's a pretty big, at least from from my perspective, that's a pretty big percentage of the portfolio. What is your thesis there? Do you think that is that something that you want to keep at 7.59%? You think it's really going to grow a lot? Is it for income? Because I know their dividend is pretty decent. Why do you have so much Realty Income? Maybe if you don't mind sharing that, that'd be kind of cool. So Michael is helping me with ET. It's Energy Transfer. Yeah, not energy trading. It's Energy Transfer. So ET Phone Home. What else cool could we talk about? How long have we been on now? 53 minutes. So we got 7 minutes left. Are there any stocks you guys want to chat about? We hit Lamb Weston last week. Let me see what when I look at my top stocks here, I'm still showing Google or Alphabet as one of my top picks. And it's currently, and I didn't own Google until a couple months ago. So it's currently 3% of the portfolio. So I went in pretty big, and we're still up about 5%. Oh wait, there was one stock called EC I was supposed to look at. So I don't remember who that was, but we're going to do that right now. Let's first of all, let's look it up on Simply Safe Dividends first. EC Ecopetrol. It must be a South American company, maybe. So taxation is foreign. There are foreign taxes withheld on it, just in case you wanted to know that. Let's see if it says where they are. Da-da. Bogota, Colombia. Wow, it's been around since 1948. That's been quite a while. Yeah, man, look at the dividend on this, and man, that bounces around like a basketball. So I want more consistency in the dividend, and there's a reason for that. But we don't have time to discuss that today. Maybe I'll include that on a future live stream. But there's a reason that I really want companies who are paying consistent and growing dividends, because it really helps with valuation. So yeah, so this earnings payout rate, wow, it's got some really wild numbers, man. I would have to really delve into this. It is highly inconsistent. Yeah, very cyclical, it looks like. Let's look at just for fun, let's look at fast graphs for EC. Ecopetrol. Well, actually, while the earnings are very cyclical, the stock price is consistently low. So yeah, I don't know. It's not something that jumps out at me as a fun stock to own. So okay, so Bob is wanting to know about DKS. I think that's Dick's Sporting Goods. DKS, yeah, Dick's Sporting Goods. Let's take a look. Man, they have grown a lot here recently. And I would say the ship has pretty much sailed on Dick's. I mean, it may be. Let me back it into 10 years here. I mean, there's still some room for it, but it's saying it's well above its historical valuation. So, yeah, I don't know. That doesn't... let's see what their fair value is. If Morningstar even has them, if they cover them. They do. So yeah, they're a bit overpriced now. The fair value, according to Morningstar, is 155. They're about 32% premium. So I think it's a little pricey for me right now. Plus, you know, the oh, I didn't look at the numbers. What am I saying? I was remembering that Ecopetrol, the exporting good. Let's look at some of the numbers. So it's got an 80 safety rating. Let's see, what else has it got? Oh, it's got some nice growth in dividends. Look at that growth, man. That's crazy. And it's consistent. So how many years have they? It doesn't say. Yeah, it could be overvalued. So yeah, I think we're getting from several places here that it might be a bit overvalued. The I know there's a spike here, but that's probably related to some kind of capital expense. It looks like their earnings is their payout ratio is good. Just one other number is return on invested capital. That looks pretty decent. So the numbers seem to go pretty well. They've got about, you know, a pretty decent cap structure. They cover their interests well. So I think the only thing with Dick's, Bob, for me, at least from my perspective, is the price. I think it's just a little bit pricey at the moment. So guess I should have put you up there. I still had Michael up there. All right. Yeah. So thoughts on Google? It is top of my list. Right behind Lamb Weston is Google. So yeah, I think it's a buy. I mean, I've got 3% of the portfolio in it. If it continues to stay down or even drop further, I might even go higher. I'm not sure. This would be a long-term investment for me, very similar to Microsoft. Microsoft is currently 4.8% of the portfolio, which is pretty high. For me, it might even be the highest. Yeah, Microsoft is my highest individual stock that I have in the portfolio. So my thoughts on Alphabet is that I'm putting my money where my mouth is on that one. Hey, Cookie Monster, welcome back, my friend. BMI Badger Meter. I can honestly say I don't remember ever looking up Badger Meter before. So this should be kind of fun, actually. Wow, 94 dividend safety. It's an electronic equipment and instruments company. It's in the IT space. I'm going to shrink this down a little bit. Manufactures and markets flow measurement, quality control, and communication solutions worldwide. So it's also international. Payout ratio looks really good. They got a nice 12% 5-year dividend growth with 26% in the latest year. This is looking actually pretty attractive. It says it could be overvalued. Let's check it on the dividend side. Also overvalued. So this is according to Simply Safe Dividends, but yeah, so those look good. The payout ratio looks great. The shares outstanding have gone up a little bit. That's not terrible. Look at these sales up and to the right. Nice return on invested capital. Free cash flow margin is good. Net debt to capital now is 0. Interest coverage. They may not even have any debt at all. Because they have no interest coverage, which means they have no interest. But that means I have interest. Anyway, so this is BMI. I'm going to put those on my list. Badger Meter looks good. Let's see what see if they're covered by Morningstar. And unfortunately, they're not. So they're showing them at a 37% premium. But that, again, is a quantitative rating. Let's see what my friends over at Tip Ranks are saying about them. Analyst forecasts. Yeah, it seems like it's a little overvalued at the moment. So the top analysts are saying there's an 8% downside based on their forecasts. And then all analysts, looks like it's the same. So there's only 6 analysts that are covering it. So, but yeah, it's something that I think I'm going to add to my sheet here, because that's some. It looks really good in terms of the financials and things like that. So I want to learn a little bit more about the management team and things like that. All right, let's flip over here. All right, we're going to hit a few things here, and then we're probably going to head out. When I was a cop, 7-Elevens were referred to as stop and robs. I didn't know you were a cop, man. That's awesome. Let's see. Okay, here we go, Jim. He's responding to realty income. Income mostly, safety and dividend yield. Tried to keep everything under 5%, but realty income, Coca-Cola, AbbVie, Procter & Gamble, Lockheed Martin have crept over that 5%. Yep, I get that. Sometimes that happens, and that's a good thing, because that means the share price is growing, right? Yeah, and he's been trimming the portfolio bottom up, which is what I did as well, and that's causing it to grow. So I get that. All right. Well, I think that's it, guys. I think we had a great program tonight. I really enjoy you guys being here, and so we're going to keep doing this. Once I get, guys, I'm building a deck on the back of my house. I say I'm building it. I've got some guys building a deck on the back of my house, but they're working me pretty hard. And so once that's done, and I've got this honey business going, I'll probably start putting out some videos, some edited videos. But those take a lot of time, and sometimes it could take 6 hours to put one of those together. And so when I got a lot of things going on, I just don't have the time to do that. But this live stream, I love it. We're going to keep doing it. This is episode 43. We're going to hit 44 next week. We're going to plan something big for episode 50. So if you got any ideas, shoot them to me in the Discord. And if you're not a part of the Discord, I will add that link after this program, and you can click on it. So with that, I'm going to let you guys go, and I hope you have a great week. Keep an eye on those earnings this week. It's going to be a good one. So we'll talk to you later. Thanks.